Hey everyone, I was posting my swing trades for the nightly game plan members, and I thought, why don't I do a short little video and share my take on the market with you, and then maybe go over some of the plays that I'll be watching for next week. Does that sound good? If so, let's get started. First, let's start with the market. We have the Qs doing a daily buy setup right off that rising 20 MA. Nice curling moving average. So that's pretty good. But we also saw that the gaps in Intel, Amazon, Microsoft, all giant companies gapping to all-time highs, all three of them, get sold. So I think the market is at a crucial juncture where this buy setup could determine the direction for months to come, um, depending on whether it fails or works. So I think the next couple of days or so in the market are going to be really, really important because if this buy setup works and we go higher, then we probably are going to retest the prior highs, and then from there, probably higher. If we fail, if we take this out, and then we continue lower, that's only going to set a lower high in the market, right? It's going to be a lower high, and it's going to create a confirmed lower high on the weekly chart of the Qs. At the moment, this lower high is not yet confirmed because we haven't taken out the prior pivot low. So this buy setup, this little buy setup that some people think is just another maybe buy setup in the market in the Qs, is so important that I am not going to be taking that many swing trades going into next week until I see the result, until I see whether the buy setup in the market works or fails. Based on what these three companies that I mentioned, Amazon, Intel, Microsoft, did on Friday, I think the odds are that we go lower, meaning when a stock gaps to all-time highs, it's not supposed to get sold, okay? And you get all three giant tech companies getting sold hard, that's not a bullish signal. So I think we go lower, but it doesn't matter what I think. What matters is what the market does. So I'm going to wait it out, maybe a day or two, Monday or Tuesday. We should be able to find out whether we're higher or lower. SPY, I think the S&P 500 is a pretty almost identical setup on the daily chart, but the weekly is much, much weaker. I mean, the SPY, this is a confirmed lower low in the SPY, and this is the second lower low. This was a confirmed lower high, right? Lower than the prior high here. So we do have one lower high at least and one lower low, which is the start of a downtrend. That's the SPY. Okay, so a lot weaker than the Qs and the semis, the SMH, the semiconductors industry, which has been leading, has been the weakest. I mean, look at this all-out downtrend on the daily chart. So it's been really weak. We're seeing the tech companies chipping away one by one, dropping. We saw Flex on Friday. That was actually, I think it was my biggest trade on Friday. We saw the big gap down, and I think that will have negative implications for the tech sector. We saw MU, is now the uptrend is completely damaged. LRCX, AMAT. So one by one, they're chipping away. TER, CLAC, you name it. They're all going. What used to be the strongest typically falls the hardest because it tops out, and the semis for sure were the strongest sector, were the strongest stocks. So and now they're leading on the way down. So we'll see. Pretty interesting. I haven't been doing a lot of Facebook Live videos, honestly, because I'm just so busy. If you're in the black room, you know how busy it's been, right? Day trading. It's just crazy busy. Really good opportunities, really good times. So highly recommend you know, you get some education so you know what you're doing and you can take advantage of the opportunities that we get every single day. When I say every single day, I'm not even kidding. Every single day. I hate to start showing you P&Ls and appear to be to come across as though I'm boasting, but it's the truth. There's just so many good opportunities every day. This is Friday, okay? 6,500. The day before, Thursday, 6,800. Day before, right? 4,200. Day before that, I think I had a $10,000 day, right? Yeah, I had a $10,000 day. This doesn't come up. Let's see. $10,000 day, right? This was Monday, I think. So it's just incredible opportunities right now. Again, I don't want to come across as though I'm showing off, but it's just incredible opportunities. So take advantage. Sometimes during the day, I'm too busy to go get a glass of water. It's the truth. Or eat the whole day. So I'm enjoying the volatility for sure that we are having in the market. And the volatility also is good for swing trading as long as we take direction, as long as we don't go back and forth a lot. And we have been going, back and forth. It's better to have establish a direction and then get volatility. So let me go ahead and show you some of the swing trades that I'm going to be watching for the coming days, for early next week. I scan every day, but on the weekend I do a full-fledged scan of my entire stock universe. So I typically have a much longer watch list. These are just actually a few of the items that I'm going to be watching for next week. But like I said, I scan on a daily basis, so my list changes every day, and it's shared with the nightly game plan members, and my official trades are also shared with the nightly game plan members. Okay, AAN, we'll start with the bearish watches. AAN was a gap down under a base and a possible 1, 2, 3 short. Where would the entry be? It would be under this pivot, under 26. Where would the stop be? Either over the base or at 43. Big stop at 43. So I'm letting it go initially to see how it sets up. If I can get a secondary sign of weakness, then I'll short it. But for now, I'm letting it go. CAT, which probably topped out on the monthly chart. Climactic monthly sell setup. Gap up, got sold. We've seen a lot of gaps recently. Gap ups get sold. So gap up got sold. A short under the base. That's not bad. Moving average is pointing on the hourly chart, pointing up a little bit rather than down. So it's not ideal, but under the base, stop above it. Looks okay. CHK remains one of the weakest oil stocks. So I like it because I've been playing oil stocks long, so I keep CHK in the background as a hedge, meaning, if oil were to drop, at least, and my, let's say, oil positions get sold a little bit, then I can short the CHK because it actually looks quite good on the larger time frame, especially the weekly chart. That's the weekly time frame. The CHK, I always have it on a watch list, or recently I've been putting it on a watch list so I can, if I need to hedge my long position in oil, then I can just go to the CHK. I haven't needed to do that so far, but that's why it's always on my bearish watch list. CLW, gap down and a short under the base. Looks okay. All right, that's not bad. ESNT, gap down, bearish, another sell setup perhaps. This one I like a lot because we got a nice 45-degree 20, nice downtrend. This is what's known as a money bar. That's where traders got caught, right? Popped, and then this was a big green bar, turned into a big topping tail bar. So we know some traders got caught there. So that would be the entry under the base here, under the triple pivots, 1, 2, 3. And then the stop would be above it. So this looks good. QNST, beautiful 1, 2, 3. And this 1, 2, 3 is under also the prior pivot. I mean, it's right at the same price, 1070. I'm not going to tell you which ones I'm actually picking for the nightly game plan members because you're not a member, but I'm picking some from these, okay, to actually play. I'm not going to do all of them, but those are the ones that I'm going to pick from this list. So this would be a short under the base and a 1, 2, 3 on the daily. Clearly the target should be the gap fill around 10.15 and maybe at the bottom there. I don't know what the price is at the bottom. 9.85 it looks like. So that's the QNST. TVTY was a gap down under a base. Now why do I like to take the next setup after a gap? Because gaps are damaging. What does that mean, damaging? It means every single person that bought the stock and held on to it in the last several months, right? Look at this. Last several months is now underwater. So when the stock starts to sell off, a lot of traders, a lot of investors will start to get rid of their positions. They'll start to exit their positions, and it starts that snowball effect. So as they sell, the stock drops. As it drops, more people start to exit their positions, and then it leads to a downtrend. That's basically how a downtrend starts, okay, and is maintained. So that's what I like about the TVTY, gapped under a 2-3 month long base and looks lower. All right, so I like it. UHS is a lower high on the monthly chart. That's starting already a downtrend on the monthly chart, and has a 1, 2, 3. It's like the AAM that I went over, but this is even maybe better. It would be under 113.29. VGR, nice looking sell setup, nice 45-degree 20. That's not bad. And then the hourly chart starting to curl, point down. This is in the way a little bit. That's what I don't like about it. And then the other thing I don't love about it is pretty strong retracement, pretty strong rally. Like the declining 20, I like minor resistance. This is called minor resistance. So we're just below it. And that's pretty good. VHI. VHI is a climactic sell setup. Now, when the stock runs away from the moving average, accelerates, puts in the volume, that typically signals a top. It could be a short-term top, it could be a long-term top, okay? So how do you know? Well, you have to look at multiple time frames and see if it's actually also topping out on the larger time frames. That's how you can tell. But if this was the top, right, then this is the retest and failure, in which case then the entry would be right here, short under the base, stop up here. All right, so VHI as a short. WTTR. WTTR is not quite my style, but it ran up hard into a declining 20 on the weekly, and this is about a 50% retracement. So this is in the right area for it to drop, right off the 200 MA also on the daily chart. Could be short right here, stop right there. All right, so those are my bearish watches for Monday. I have a bunch more, but these are some of the more ready ones, the ones that are ready to go. Bullish watches. These would be good if the market buy setup, if the buy setup in the Qs and the SPY were to hold and start to move up. So some of these will be, I'll go to them. Some of these will be good. ABEO is a daily buy setup. That's a 1, 2, 3, 3 red bars in a row. And this is called a COG bar and a bottoming tail bar. So that's not bad. It's got also a weekly good location at the minor support, monthly buy setup. So it's pretty good on multiple time frames. We need to see the rising 20 on the hourly start to point up a little bit, and then it'll be good to go. ASET is a mega gap up. I don't love the daily because it's already up several bars in a row. Certainly like the larger time frames. down a lot. Hourly is grinding up. I did the VT, which was an official play also in the nightly game plan. I gave to the nightly game plan. And it's the same idea. Stock gaps down a huge amount and then breaks out on the hourly chart. See it? So right here, and then it quadrupled, I think, in 2 days. Unfortunately, I got out a little too soon. Um, I had several exits, but I didn't, I wasn't in it that day, so I was basically out here. I mean, on the second day. But that was an amazing move. I do these all the time. I mean, not when I find them, I do them. I like to do them a lot. Let's see, what was the other one I was going to show you? TNTH? I don't think so. ENTH? It's all right. Something very similar to the VT. But that's the idea on the A set. AGO was a gap down that got bought and is now basing near the top. That's bullishly. So over the base long, nice also rounding bottom on the hourly chart. So over the base here. And then weekly starting to turn up. Monthly buy setup, I believe. Yes, it is. Monthly buy setup, so not too bad. AGO as a long. AMP is more of a wild card trade. It would be called a presumptive monthly buy setup. If I were to give it a name, that's a gorgeous monthly pullback at minor support, rising 20, 40, 60% retracement. So it's really, really beautiful. Now, how do you play this? Well, you want to see multiple time frame alignment. Oftentimes, you wait for it and it just doesn't wait for you. Or basically, what if this stock were to run up, just, run up from here, then I'll have missed it. Then there'll be almost no way for me to get in it. Okay, maybe it comes in later on, gives us a buy setup. Maybe not. Often they don't. So here's an idea, just over the base on the hourly chart. Stop right here. And if the market were to turn back up, then this should take off. Why? Because of that gorgeous monthly chart. Okay, monthly pullback. So I like it a lot, but it's a low odds, high reward kind of a trade. Low odds because it doesn't have multiple time frame alignment. The daily and the weekly don't yet look good, and yet the monthly is so good, and it's at the bottom. When you pick the bottom and the play turns out to be correct, then you pick the bottom, you pick the best price. You're not going to lose, no matter what the stock does, unless it actually fails. So that's what I like about picking the bottom and not trying to. If you try and catch it later, let's say it bounces, right, and you say, "Wow, I really want it to be in that stock," but it's already kind of gone, and then maybe later on it gives you a buy setup or it gives you a breakout like so, and then it fails. You can easily get stopped out, and then maybe the stock continues higher later on because the monthly buy setup is still in place, right? So in this case, you could easily get stopped out, even though the monthly chart is still undergoing a buy setup. Whereas if you get it at the bottom and it stops out, probably the monthly is going to fail anyway, right? Because the monthly buy setup will be failing. BLL is a daily buy setup. A little sloppy, but good weekly, good monthly, as a long up here somewhere. DERM is the mega gap down, and then now starting to point back up. So like it. Higher over the base. It's a little thin. ENB, I almost played it on Friday. The truth is, it doesn't look great on the daily, but look at that beautiful curl on the hourly chart. And if it just goes back up to 31, that would be a nice target. Okay, so ENB, interesting. Glue, what a bullish stock. I mean, just incredible relative strength. Compare this to the market. Market is way down here. This thing is at the highs, daily highs. So base breakout basically with a shakeout. So it does look higher. ICPT, this stock I tried a couple times and wouldn't work, or it did work, but I took a stop on it. I'm not sure where I tried it, but I like a lot the weekly chart on ICPT. Look at this. Doesn't it remind you of maybe CMG? Look at CMG. Wide range red bar, wide range green bar, and then it went sideways and then broke out, gapped up on Friday. Okay, well, the ICPT, here, that's the CMG. Here's the ICPT. Same kind of thing, same kind of a pattern. It's a transition A pattern is what it is known as on the weekly chart. Wide range red bar, wide range green bar, bases, breaks out. So now it's giving us a buy setup on the daily chart, plus a 1, 2, 3. So the entry for this would be, I like the ICPT a lot. Over here, stop right here. My biggest concern is the market. That's my biggest concern. ILG has a gorgeous looking weekly buy setup. So I like it higher. And then the daily is starting to turn up. So just need to see it break above the range a little bit, stop under. So I like the ILG a lot also. P is the same as the ICPT. ICPT looks a little bit better, of course, but it's a transition A on the weekly chart. Nice climactic sell-off on the monthly. So, and a 1, 2, 3 on the daily chart. Entry would be over, I think, 559. Stop under the SPARS low. Or you can put it under the base. But no need really, just under 530 is okay. On the P as a breakout play. PG is just down a lot and starting to turn up, right? So long would be over the base, kind of like the ENB. Stop under the lows. I like the ENB a little bit more. I'm talking about this one, the ENB, but it's the same idea. PIR is a gap down, a sell off, and then a possible turn up, right? Let me show you something. This was a play that I did kind of a while ago, but same idea. Sell off, and then it turned up, and this was a very, very nice swing play. I don't know if I can go back that far on the hourly chart. I can if I add more data, but let's see. It's the same kind of a setup as the PIR. It was at least. So here's the turn, right? So gap down, sell off, and then it starts to base, and then you play the breakout. And this was very, very nice. And then bam, right to target. Okay, the daily 20 MA. So the PIR, that would be the target. Now I wouldn't expect it to get to $3 because we have the prior high that's lower, and the moving average is going to will be catching up. So it'll be lower than, it won't get to $3, probably will be somewhere there. So that's not bad. Over the base, stop under it. PRTA, same exact idea. It triggered already though. Let me show you the hourly chart. It's taken a while because I added 250 days. So base breakout on the hourly chart. And Roku is a transition A on the daily chart. So Roku over the base, stop, I would say under this hourly pivot, like under $32 or so. And the entry would be over the base. About a $2 stop, it looks like. Oh no, it's about $1, let's see, over 33.40, $1.40, $1.50. That's not bad at all on the Roku as a long. So I like it. So these are some bullish and bearish watches. If you play swing long, I mean, if you trade swing, then these are some watches that I hope you find helpful. All right, everybody. Hope you enjoyed today's video. I'll be back with some more videos, or at least that's what I plan to do. Maybe sometime next week once we see what the market does. Have a great rest of the weekend and talk to you soon. Take care.